AustralianCPI.com.
This is Chris looking at the upcoming Wednesday, July 23rd trading session, and as you can see, right off the bat, we have an announcement in Australia, which is the CPI year over year, and it is expected to come out at 3%, was previously at 2.9. Quite frankly, this is one of those things that will be somewhat localized in the sense that it will probably affect the Australian dollar, maybe the ASX itself. But beyond that, I wouldn't expect too much in the way of market moving event out of this beyond Australia. It's more or less a regionally impressive event. That being said, we go through the rest of the Australian session. There are some numbers here, but none of which should move the marketplace. And as a result, the next thing that we will be watching will be the Bank of England minutes. Now, the BOE will release the minutes, and that tells you what the members are thinking, and at that point in time you have the ability to maybe discern whether or not interest rates are likely to go higher or lower, and that should have a significant effect on the British pound and the FTSE, as markets, stock markets of course are very sensitive to interest rates. Could affect the gilts market if you have the ability to play that as well. Looking throughout the day, there is Canadian retail sales. Could be interesting. At the end of the day, though, it's probably not going to be a market moving event beyond the Canadian dollar. What I do find interesting is oil inventory numbers coming out of the United States that will affect the WTI markets, and as a result, oil traders pay attention. The drawdown will be crucial. We did sell off during the session, so on Tuesday, so it's possible we get a little bit of a bounce here if demand seems a bit stronger. Directly after that, we have an interest rate decision out of New Zealand, and while that should essentially affect the Kiwi dollar more than anything else, you have to keep in mind that New Zealand exports to Asia quite significantly. So if they mention that not only do they raise the rate, but they expect more, that could signal that Asian demand is climbing for commodities, and that will be good for risk assets in general. Watch other markets such as the Nikkei, and if you have the ability to trade perhaps the Hang Seng or something like that, or perhaps even the A shares of Chinese mainland companies, that could possibly be something to look forward to. The Japanese numbers, although they're listed as medium here as far as adjusted merchandise trade balance, that simply will tell us whether or not the export economy in Japan continues to throw a lot of exports out there. Could show a little bit in the way of what the global demand is, but quite frankly, I do not anticipate it to be a market moving event. With that, let's take a look at the charts. The FTSE had a positive session on Tuesday, and as you can see, did break above the recent high. So at this point in time, it appears that we are going higher, probably to the 6,900 level, and possibly higher than that. That being the case, pullbacks should continue to be buying opportunities, and buyers should continue to enter the market every time we pull back, buying calls, making them more and more attractive. As we have had a significant move higher, we've had a significant pullback, so now the question is can we break above 6,900? That is the ultimate resistance. Above there, this market breaks loose and we go much higher, but in the meantime, it certainly looks very bullish. The S&P 500 continues the uptrending channel that we've seen for some time, and it also continues to struggle just below the 2000 level. With that, it is not until 2000 gets broken to the upside that I would be overly interested in buying for a longer term move, but pullbacks along this uptrending line should continue to offer value, and therefore will be looked at as potential buying opportunities by myself and many other analysts out there. Looking at the British pound, we have fallen during the session and forward a hammer yet again. This screams 1.7050 is supportive. I believe that's the case, as the 1.70 of course will be just based upon the large round number. You can slide the support line here, and it now looks like a break at the top of the hammer sends the British pound higher, perhaps attacking the 1.72 level and possibly going to 1.75 given enough time. Again, buying calls will be the way that I will be playing this market. For my money, the real move of the day was in the euro dollar. You can see that the euro broke down below the 1.35 level, and at this point in time, looks very vulnerable to continued weakness. I will continue to sell rallies as they appear off of the short-term charts as long as we stay below 1.35, because I ultimately believe that this pair goes to 1.33. And with that, we have looked at the Wednesday, July 23rd market conditions.